So, what's the real story with the Indian IT sector right now? Today, we're going to break down a recent PL Capital report that paints a really interesting picture. We're talking short term struggles, a fascinating split in performance, and, of course, the huge wave of AI that's on the horizon. Okay, let's start with the headline from the report because it really says it all. Muted Q4 FY27 outlook in focus. This tells you that, yeah, the immediate future might look a little soft, but everybody's eyes are already shifting to what comes next. The real story is about fiscal year 2027. It sets this tone that's both cautious for now, but also very much looking ahead. Okay, so when they say a muted quarter, what does that actually mean in hard numbers? Let's unpack it. Just 1%. That's the expected median growth quarter over quarter. Now, you have to remember, Q3 is typically slow because of holidays, so you're always hoping for a strong rebound in Q4. Seeing just 1%, well, that's why the report calls it discouraging. It's definitely not the bounce back anyone was hoping for. Now, this softness isn't just happening out of nowhere. The Indian IT sector is totally plugged into global events, and right now, there are some pretty significant external pressures creating these headwinds. So, what's really driving all this? The report points to this kind of domino effect. You've got geopolitical conflicts making clients uncertain, and when clients are uncertain, they hesitate. So, what happens? Deals take longer to close, sales cycles stretch out, and it's just taking more time to turn a signed contract into actual money in the bank. But here is where it gets really crucial. This slowdown is not hitting everyone equally. The report makes it absolutely clear that the sector is splitting into two very different tiers, and they are navigating these choppy waters in completely different ways. Think of it as a race between giant ocean liners and nimble little speedboats. The Tier 1 companies, we're talking the massive, established players, they're the ocean liners. They're powerful, no doubt, but they turn slowly. The report even mentions their talent debt, which is a really smart way of saying it's a huge challenge to retrain that many people for new technologies. On the flip side, you have the Tier 2 challengers, the speedboats. They're smaller, they're more agile, and they are proving to be way more resilient and adaptive right now. And you can see the performance gap right here in the numbers. The forecast shows the Tier 2 companies growing at 1.2% this quarter. Meanwhile, the Tier 1 giants are lagging behind at just 0.5%. That is more than double the growth rate. It's a perfect sign of that speedboat agility in action. This trendline from the report really tells the story. You can see the growth for Tier 2 companies consistently staying above the Tier 1 line. So this isn't just a one-quarter fluke. It's a clear pattern. It's sustained outperformance. Okay, so you can't have any conversation about the tech sector today without talking about the elephant in the room, artificial intelligence. For this industry, it is a massive force that is both a huge threat and an absolutely unprecedented opportunity. And this is the billion-dollar question that the report is really grappling with. For an industry that's built on providing services led by people, is AI ultimately going to create more work than it destroys? The answer, as you can probably guess, is not simple at all. The report lays out these two faces of AI perfectly. On one hand, you have the threat, this cannibalization risk. That's the fear that AI is just going to automate away the bread and butter jobs these firms do. And you can see that pessimism in the market, with the IT index taking a big hit. But on the other hand, you have this enormous opportunity. We're seeing companies starting to prioritize spending on custom AI solutions, and that's opening up entirely new high-value services for these firms to offer. So let's pull all this together. You have a slow quarter, a market that's split in two, and the massive disruption of AI. When you consider all of that, what's the report's final verdict on the sector's health and where the opportunities might be? This chart right here is really key to understanding the conclusion. It shows that the valuations for both Tier 1 and Tier 2 companies are actually trading below their 10-year average. What does that suggest? Well, it suggests that all the recent pessimism and fear about AI might have pushed these valuations down to a pretty attractive level. And that brings us to the bottom line. Despite the short-term softness, the report is actually positive on the sector in the long run. But, and this is a huge but, it's a selective optimism. The preference is clearly for those mid-cap, Tier 2 speedboats. They're just seen as being in a better position to adapt and grow. The report also makes this really interesting financial point. Any hit to profit margins from more spending on AI could get cushioned by the depreciating Indian rupee. And this whole analysis really leaves us with one final, pretty provocative thought to chew on. All these trends, from growth figures to adapting to AI, they all point to this one big question. Are we seeing a fundamental shift in the tech world? A world where being agile now permanently trumps being big? That's a question for the entire industry to think about.